Hello guys, welcome to the Trading Parrot. Yesterday we had the FOMC meeting, we covered it live in a stream, we got the 25 basis points reduction of the interest rates as expected, the speech was quite hawkish and that has spooked the markets. In today's video we're gonna look at the effect that it has had on the dollar, gold, NASDAQ and S&P. We'll look into detail into that because really that does matter for what's to come with Bitcoin, whether we can get another impulsive move to the upside or a local top that drags a lot longer into 2025 before we get another one to the upside. We're also going to look into what the price needs to do for further continuation in December, and we are going to define the point of break that puts the price due for a deeper correction. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And yesterday, after 1 month of not asking for likes, I decided to resume this part of the video because after having it done just for 1 day, you can tell that we got more than double the likes and comments in the video. If you want to keep supporting the channel, make sure that before you watch the video, you hit the like. While you're watching the video, leave me a question or leave me any comment below, share it. All of that really helps the channel, particularly when the price starts coming back down and people stop watching the videos in YouTube. The algorithm is really going to take that in consideration for the channel to continue growing. So thanks so much for what, and let's go into the content. So I'm gonna go through a lot of alpha. This alpha, you're gonna notice that there's gonna be some of them supporting the bull case, some of them supporting the bearish case. The most important part is that you take note of the point of break on each of these alphas, which I'm gonna try to remember to always emphasize. You won't get at the end of the video any call telling you buy, sell, what is the next target with 100% accuracy, but you're gonna get an idea of when each of these individual alphas support each of the theses. Let's go with the open interest because this alpha, I love it, it's magnificent. Open interest has been preceding price action for quite a while, and we're gonna try to use it once again and see if we maintain that pretty much 100% accuracy. So if you've been watching my videos, you probably already know that we use this extension from 23rd of January into this top, into the bottom at 49K. That gave a projection of $32 billion in aggregated open interest across exchanges. It was so precise that as soon as it touched that, it remained 24 days below it. That coincides with a 100K price, and you can see that what this is saying at the moment is that we broke out and we came back for a retest. So from the point of view of this alpha, so far nothing has been broken, and it could be that we get a continuation. It's worth mentioning that if in the coming days we continue going lower in the price, that is very likely to drag back down the open interest inside the previous range, and that is the point of break for this alpha, because if we start coming back below and putting daily closes or even below 29 billion, that is definitely a signal marking that a local top has been put, and we might need to wait for quite some time before we take the 34 billion top. Next alpha, this is also bullish, but it's got a leg there I want to mention that is slightly bearish too. We have a December in the green. In bull markets at this time in the cycle, we typically, after getting a November green, we do get a December green. And that is the most simplistic way of seeing this. And that's why many people call November the month of deciding what's to come up until pretty much February and March. October is a guaranteed month. September tends to be in the red, but this cycle was in the green. And that's where I start thinking that there could be just a chance that December ends up in the red based on the fact that September was in the green. The reason for thinking that is because everybody was expecting September to be in the red, just like most Septembers. Up until 2013, nothing comes close to the 7% up, but there is that small chance that since we have had already September, October, November in the green, in which such substantial moves up, we got a 37 in November, that we could face a December in the red. Low likely, but I think it's possible. Just as low likely it was September to be in the green after not having a green September in so many years before. Next, comparing 2020 with 2024, it's still relevant for me. And if you compare what we were doing On 16th of December, we confirm a bullish cross and we carry on putting new highs on the MACD. In this December, we have confirmed a bearish cross at this point. Another thing to note is that the pattern that we ended up building using all the candle closest prices on the top and on the bottom ended up building. In 2020, you can see that we had a broadening wedge. We formed this pattern not just by these 5 points of contacts, but also the breakout candle hits perfectly the top of the broadening wedge before breaking out outside the pattern. In this cycle, we get a different picture, not just from the point of view of the pattern, which in this case is just an ascending wedge, making it look a lot more bearish than the 2020 version. In 2020, at this point, we were already hitting the second resistance. That was at 120, and after seeing the first resistance actively pushing the price back down, you can tell once again that we are behind now schedule. So I've got two bullish things to say here that I am starting to feel like it's a little bit of a hopium, but I'm gonna stick to the rules of we haven't broken down this ascending wedge yet. It's got more likelihood just based on the pattern definition of breaking down. The support is literally 100K, and on the daily time frame so far we are holding. I'm gonna talk about levels of resistance and support just in a second when we flip to the 4-hour daily charts, including the RSI reverse analysis, but just looking at these candle patterns, you can tell that we haven't broken below it. And that gives a little bit of hopium, so there is still a hope that we go back and hit the resistance once again. We got tons of things against us, including the general markets, what they're doing, so we will cover that in just a second, so we don't get overly bullish just by seeing a bounce on support right next to a massive red candle daily. It's not really that big, but it's crossing the whole range of the pattern, which we haven't done inside this pattern before, not even with a green candle. The second thing that is bullish in here is that for the month of December, if you remember right, and if you have already watched in my playlists from my channel all the tutorials, you should already know what I'm about to say, which is if in a month you manage to touch at least once the first resistance, in this case is the first green line above the pivots, then we should be expecting further upside in the upcoming month. Right now we are 10 days away from January, so that is pretty much saying that whatever downside there is here, we should be able to recover it in January. And bear in mind that at the moment, those bullish calls are having to compete also with a lot of bearish things. It's never that easy. Let's move on to the 4-hour, and before we talk about any potential recovery trend lines and stuff like that, levels that we need to regain, I want to focus on what we did yesterday in the live stream, because I want to claim a little bit of merit in here. Yesterday we were talking about two setups during the live stream mainly. The first setup based on candle patterns was this 4-hour head and shoulders that I believe at the time that we start the stream we were still pretty good, not selling off, just somewhere around 104 possibly. And I was saying that if we complete the right hand shoulder and we break from below, the target was going to be 98.9K. I still have this line, which is the height of the full pattern. And you can see that if we place that from the point of break, and if you wait for candle close, you were at 102.8, you could have caught a 4K move to the downside plus leverage that will have played out not just 100%, but right at the take profit area. The price has already bounced back up almost everything. So the perfect entry and the perfect exit. We also say that to enter into a bull setup, we needed to break out above 105 because that was the resistance when we were in the live stream. And I left the target in here in case we break out above that line. And that is also a success, because as you can see, we never close above that level. That means that there was never a call to enter in the long. So if you're new to trading, you can see that the key to make good calls is never to say, I think it will go up, I think it will go down. That is not just silly to think about it, but it's an invalid question in the context of trading. In the context of trading, you need to focus on two scenarios, identify their likelihood, and the most important thing, identify what triggers the entry and what invalidates that entry. And if you are disciplined, And if you have something more than a kilogram in between the two shoulders, you can do it. And by the way, I'm always joking about those topics. I just find funny to say those things, but I don't mean to insult anybody. And I believe that trading is for pretty much anyone. And many of the best traders are not necessarily people I will say are super intelligent. They have just the discipline to stick to a plan and follow it without breaking any of the rules. You can be extremely intelligent and have your emotions all over the place, an amazing analytical mind, and still trade like crap. So let's make that clear. All jokes. Alright, let's go with the RSI 4-hour, okay? We broke the global support, so we need to pay due respect to that. That support was from the 1st of October, so that means that all this rally going up and we have been respecting support. But to be fully honest, we had a fake out on 26th of November. In here, we reaccommodate that. That fake out called for this support at RSI 36 on the 10th of December. Perfect. But now we're having a second move down. And guess what? It seems so far to be a fake out to the downside on the 4-hour. So you might be thinking now, wait a second, what are you saying? Are you saying that we're going up? No. I'm saying that technically going below the previous range and coming back inside, it is a fake out. Sure, I accept that. But since this is the 4-hour and the 4-hour tends to be a lot more crazy than the daily, there is still a chance that this move back inside the range is the actual fake out and we start doing something like this. So you get two entries if you're bullish. One entry is if we start coming back in here and back again inside it for a second time, forming a W bottom formation and even before breaking out above the trend line. Or if you're more conservative, you can wait for this one as well. And if you're curious about that yellow trend line, that is located at 43. That is assuming that we break it from below the price where we are. If we break it right now, we need to go to 48. And that means going beyond 102.9. So let's be safer and let's call it 102.9 because we are right next to that. If we go lower, we're going to have to redo this analysis. You can see how the candle closes went below the global support, symbolized by this red line in there. And in the second candle, we came back inside, retest, and continue going up. We are going to have to reaccommodate the global resistance. Now it's going to be placed like this, and it's now at a level of 72. So if we saw this breakout to the upside, we could be having on the table 72. Notice as well how yesterday on the 4-hour, we stopped at 33, which was the level that the percentile nearest rank on the bottom band was giving us. So statistics were calling for that level to be the reversal, at least on the 4-hour. So let's update this now to 72. It's a lot higher. So if from where we are, we were to break out above this yellow line, and if things reverse and we were to have a nice rally to the upside, that will take us to 112.6K based on the 4-hour analysis. So here on the daily, my perception is that we took a huge bullet, okay? It hurt. And what the price is currently doing is not really helping so far on the daily. Let's start with the volume profile. This one said we broke out from above this resistance, which is the volume profile range. We have 3 green candles, and then we left some wicks to the upside, and then we have a massive red engulfing candle coming back into the previous range. The trend line came at the rescue so far, but is only helping us to retest the breakdown against the top of the range. So this is a textbook pattern for saying that we are due for going to the bottom of the range. And that is something that I hate to say, and I even struggle to believe whether it's gonna play out in December, but I think the daily is gonna have a really hard time to dig this move up against resistance after the red engulfing candle being back inside the previous range and not coming back down. So the first time that we are seeing a daily candle below the trend line, it's even gonna make it more difficult to think that we are not breaking down. At the moment, there is just the trend line holding us, and there is the point of control, the fact that we are still on the top end of the range, right? We haven't crossed this red line that symbolizes the area with more volume. Multiple times, whenever we get close to the point of control, the bidding starts getting very aggressive and they buy the dip. But no one can guarantee that that's gonna continue happening, especially if the general markets were to continue bleeding today and in the upcoming days. And yes, we closed the CME gap and that is gone. There's not much more to say about it. On the weekly, we have this indecision candle right there. You can see small body, red, larger wick to the upside, smaller to the downside are my observations. Wells haven't done much in here, no distribution, no changes. This still looks bullish from the point of view of what wells are doing. The short-term holder realized price is getting very close these days to 85k, to be precise 84.2, and remember that that is a moving number and represents the average entry price from short-term holders. Those are the guys that have typically first the panic and start selling like crazy when things start looking into the red. So if that line is at the moment coming back up like this, and this was to bleed in that direction, assuming we don't break back above it, because that's another option that I forgot to mention, we have here fair value gaps. So there is crumbles for those pigeons to buy and break above 102, which is what the daily says is the top of the range. And if we do that and we go for the first fair value gap or even the second, the most important thing is that we hold there and that we don't get sold out back down and even use those as liquidity hands to dump below the trend line or below the point of control, even worse. In most cycles, the short-term holder realized price has held the price throughout the bull market. In this bull market, it has been really crap. We spent so long below it that it's almost not an alpha anymore in that sense. The only thing that still stands about this indicator is that it will still attract price whenever there is fear. And you can see that regardless of this underperformance in here and in here, when it comes to holding it, which we didn't, that still attracts the price on every sell. In here, in there, in here, very close there. There are multiple touches and moves below it. So we need to consider that we haven't touched it since 10th of October. Thankfully, it's coming up. So hopefully we meet with that just in this way, it continue up and we don't spend again 2-3 months below it. Yesterday, the BTC ETF had positive inflows, slightly smaller. We can say some funds were selling, not BlackRock, and that contribute to a smaller number as well. We're now in the green, no longer extreme greed. This is the highest greed, of course, 75 at 76, it becomes extreme. In the last 24 hours, we have had liquidations of 400 millions across all coins and all exchanges, but as you can see, it's not as high as what we had on the 9th of December. That means that liquidating longs at the moment seems to be diminishing. Let's hope for that. Remember that as soon as they are done liquidating longs and it starts becoming more difficult to liquidate them, they are gonna start thinking, let's start now liquidating shorts. And I can see that has already started happening, hitting at 102. Let's hope that it's gonna continue in that direction rather than getting another wall of green longs liquidated, which is the case since the time of the meeting, right? We get 103, 102, 101, 99, 98, all of them liquidated. The liquidations are visible in here, the larger pockets as well. Many people have entered at 98.7, leaving their risk slightly below it at the moment. There are not many shorts at the moment on the upside in the shorter term. So from the point of view of this, it makes it more attractive now to go and hit them again. That is just an isolated comment, not based on what I think is going to happen, but what the chart is currently saying only. On the longer term liquidations, we got pretty equivalent pockets up and down at the moment. Some red, but it's a bit too far to reach. We need to move 14k to reach it. Below the price, we also need to move 13k, which is also significant, but we can only reach yellow in there, which is very similar to this one in here that only needs a move of 6.5k to reach. So from the point of view of longer term liquidity pools, the lowest hanging fruit is still at 108 and beyond. So during the stream, we were looking at this and I think we were reaching the 0.22 or 0.20, I believe. That's when I left the stream, and immediately after the price started dumping like crazy. And you can tell that there was a lot of bidding in here. People bought the dip all the way until 99.8k. Then it stops. So now we can assume that they are now in profit and considering whether to close that or to carry on run with the profits. Still, there is bid more than ask. That doesn't mean that this will continue, but not seeing red at least says we are not in one of those areas that is evident that we need to dump the position. But it doesn't tell you that you should hold it necessarily. The delta now is putting the shorts at risk at this point in time with 629k. That is a lot, not for an historic number, but it's a lot considering that we approach the FOMC meeting with 500k in longs at risk of getting liquidated, and we flip from 500 to minus 600, so we took out 1,100, causing a move in the price from here to here, which is a 6%. So if we were to take those shorts, we got some room to go to the upside just according to the analysis of the delta of liquidation pools. Order books are showing something very disappointing, which is that the smaller pockets are buying this dip. You can see it in here from 100 to 1k, people are buying, but all the other cohorts seem to be selling on the weekly time frame, which is not necessarily the best news, I agree, and the only thing that can save this alpha from being ultimate short signal is if they suddenly enter with a market order and things start flipping in minutes once they reach the price that they want. We can see buying at 95k with almost 60 million, and after that there are just plenty of levels of 20 something, and still the selling wall with 91 million at 110k. Interesting that they still have it there. And the delta of longs versus shorts on trading light has been really useful. This time you can see that once we cross the trend line that we've been speculating is the valid one, indeed that was a sell signal and we came back down below the middle line. We're gonna continue looking at this, on the lookout for any potential breakout, like for example something like this, or maybe crashing a little bit longer and then re-entering. When longs start to enter, we tend to see the price push up more consistently. Levels of liquidation levels in the past 30 days, the largest is 99k, indicating that that might be too attractive to let it go. That kind of coincides with these longs that enter in here, which apparently are smaller pockets according to the order book. So that might drag down this line in red further. Fair value gaps are looking good actually. This is super annoying because the ideal scenario is when you see many things in confluence. The fair value gap is saying that we have room to go up until 105 at least, just because on the daily there was a big move fast, which we can see more clearly if we go to the daily time frame. That is a fair value gap. There's no overlap with any other candle. If we place it on the 4 hour, you cannot see it, but this indicator allows you to still be aware that there is a daily fair value gap above the price. Substantial? Yes, 2.6k is quite substantial. So let's go to general markets. I want to make a stop here. I know the video is going to be too long, but if you're a serious trader, you want to be informed about everything and not just the short-term moves and support and resistance. So the dollar is putting a new high. That is bad news. It has already touched $108. You can see that the RSI wasn't lying when it came back for a retest on the weekly. We talk about that in the live stream as well, and it managed to break the highest resistance, and it's extremely annoying, not just for crypto but for general markets too. Dollar seems to have confirmed the top in October, and we are on our way now, maybe 30% of the target of the hive signal, which is calling out for 2.463 as the final target. VIX, I need to make you aware about this. So VIX, the way it works is it tracks the volatility of general markets, and you can see every contraction of the market and every breakout of volatility. That volatility is not always to the upside, sometimes it's to the downside. Like for example in here you get this contraction, and if we focus on this one, which is very important, you see that it's making some peaks, then you get another peak in here, and then you get a breakout that is 27th of January, and with that breakout that reaches a level of 20, then right after, in March, there is the COVID crash. So that is a spike huge in volatility. You can see it also, the breakout on the RSI happens in January, the retest is in February, and in March, everybody's underwater. So why am I showing you this? Because from 20 2022, we have seen a contraction in the economy. There was this event in January with the Nikkei that spiked to historic levels of 66 in the VXY, but it ended up closing at 23, okay? So that is something to note. We have stayed around the breakout area. We came back inside, and yesterday we were seeing this at low levels, but at the close of the price, it ended up reaching as high as the week before the Nikkei event. So those are relevant things, are not final things to tell you, okay, there will be a crash tomorrow in the market or something, but it's a little bit of a yellow warning alert, particularly because we have a breakout on the RSI that managed to close at 58, coming from 43. Of course, this is not the same as all the contraction that we experienced from 2018 into 2020. That's 2 years of contraction. You could argue that this is a contraction that lasts from COVID and broke out in October 2023, but we are already like a year away from that. So someone might say that the breakout is going in this direction at the moment, and that could call for a market crash somewhere in 2025, potentially. So we'll cover this again in the future, particularly if we see any substantial move in here. So far, that has been enough for the NASDAQ to come down, close the gap that we were seeing yesterday, carry on below the lows of the previous week, and starting to enter into the area of the target of the hive signal, which is pointing towards 19.6K. On the RSI, we have this fake out in here, so I'm really not sure how am I gonna put this to connect it with a breakdown. So RSI, let's say, is not gonna help. S&P has done a pretty ugly red candle there. We get support coming in at 5.7K, so let's hope that that holds. In my analysis yesterday, I show you this breakdown that happened in August and that we have never managed to go beyond 70, and we seem to see another rejection from 70 in a continuation of a potential channel down like this. That supports the idea of a potential breakout larger on the VIX at some point in 2025. And wrapping up general markets, this doesn't necessarily look positive, but indexes are probably the most difficult thing to forecast, so take all my calls and all the comments about general markets from my side with a grain of salt. This is just my opinion and the best I can do, and I'm sure that I'm gonna be wrong, not just on one thing, but probably on many things I just said. So I guess many of you are gonna be disappointed that I haven't said what is my take on all of this. So I'm just gonna give you a finger in the air after all of this, because I tend to trade with data, and once I see confluence of too many things, it's too obvious that we need to take a short or a long, then I do it. And I let you know with signals, not signals, but I let you know somehow in a very subtle way via Telegram, Twitter, or Instagram. In this case, I really have one of the biggest mixed bags in here. Based on where we are in the cycle, we should continue going higher. But my take is, if there is continuation on the downside and the overreaction that the markets are having, that will put some stress on Bitcoin, and it's already affecting the schedule that we were following by the day up until the 16th of December. I think if we manage to hold in here over 100K and we start testing again the 108, then it's absolutely easy to start thinking that we might as well hit the next level of resistance at 120. But also, if we start looking like we are breaking down from an ascending wedge on the daily, not considering the low 90s or even slightly below 90s, is being too naive too. I'm gonna make just another video today that's gonna go to Coin Bureau Trading channel. Let me know in the comments if you want me to review all coins. If there's not much changes in the price action of Bitcoin, I don't think it's worth making on the same day another Bitcoin video covering the same things I just said. So I could cover all coins. I could look into the altcoin season, which is actually doing more or less what we talked in the previous video about altcoin season 2. So maybe it's better to look into the larger market cap altcoins and do the top 10 of them and seeing how they are reacting to this sell-off. Let me know what you think. Guys, if you want to trade altcoins, Bitcoin, Ethereum, get access to leverage, trading bots, all of this built in the exchange, my two preferred exchanges offering this wide array of services and products are Bybit and OKX. Bybit at the moment is offering 30,000 in rewards, the lowest fees to trade. OKX is offering 60,000 in rewards. Some of the rewards include iPhones, MacBook Pro, and USDT. On OKX, this particular event is ending in 14 days. But if you're sick and tired of KYC or you just want to stay away from it, I've got two non-KYC exchanges, starting with Bluffin that is offering 10% cashback up until the 23rd of December, just 4 days left. If you use the link in the description as well, you get the lowest fees to trade. And my second non-KYC exchange is 2bit that they just made me this nice poster including all the instructions on how to get those rewards when using the links in the description. Thanks so much for watching and I'll see you in the next one. Bye bye.